Interest rates on home and car loans and personal loans set to rise later this year. Big moves in global financial markets and retailers feeling the Omicron strain. It's Thursday, the 27th of January 2022. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson and good morning, Sean Aylmer.
Morning, Michael. Are you happy to be back?
It is great to be back with full-length episodes. Everything back to normal. It feels like everything is okay again.
That's true. It's been a very, very long summer break for Fear and Greed, I think. Perhaps a little too long.
It certainly has. And for anyone who has enjoyed our 5-minute episodes, the Fast 5 by Fear and Greed, that actually exists as a separate podcast in its entirety. So you can find that on any of your podcast platforms. Just search for Fast 5 by Fear and Greed. But otherwise, if you like the longer episodes and all your interviews and everything, then stay right here. And we've got a cracking interview for the first one for 2022. Sean's chat to Rich Newsom, President of Wealth of Mercer, which is one of the largest fund managers in the world. Huge company, a lot of money under advisement. So it's a really, really interesting chat, that one. But first, Sean, our main story today. When will the Reserve Bank lift the official cash rate and trigger a jump in home lending rates? There's been a lot of talk about this in the last few days. Could it actually be as soon as May?
According to plenty of pretty good economists, including the teams at Commonwealth Bank and at AMP, it could well happen in the next couple of months. That is because inflation is more prevalent in the economy than authorities have forecast. We saw that in the official inflation figures released on Tuesday by the Australian Bureau of Statistics. Headline inflation hit 3.5% last year, well above expectations. Underlying inflation, which the Reserve Bank looks at closely when deliberating on interest rates, hit 2.6%. Why is all this happening? Well, global supply chain disruptions and material shortages, combined with rising freight costs, high demand, all that is pushing up costs, especially around housing, cars and fuel. We've seen that at the petrol bowser, that's for sure. Furniture and audio-visual equipment are also rising in price. The argument put forward by the Reserve Bank is that all these price rises are transitory and post-COVID will fall back a bit. But that argument is looking a little shaky. Get another quarter of price rises at the same level as December, and the central bank will have to do something about interest rates. The Reserve Bank controls the official cash rate, which is used to set variable loan rates, including home loans and personal loans, car loans, that type of thing. If the Reserve Bank shifts the official cash rate up, then all the rest will follow. Bond market investors have taken a punt that there will be 2 interest rate rises this year. Remember, the rate at the moment is 0.1%. It is very possible it could be 0.5%. By the end of the year. That means a variable home loan rate is probably in the 3s, not the 2s.
I'm going to have to ask a bit of a straightforward question here, Sean, to help me get my head around it, about the impact of inflation. Is inflation hurting businesses?
It's actually a bit early to tell. Some increases in prices is actually pretty good for businesses and for the economy. Now, the National Australia Bank monthly survey showed business confidence tumbled 24 points to minus 12. That's below Delta levels last month, while business conditions dropped 3 points to 8 points. A lot of that was around those price rises, so that suggests that inflation is hurting business. Obviously, the economy is still going okay, or at least it was in December, but businesses are clearly worried. It's not just prices either. Staffing is a really big issue. Many companies, from the Commonwealth Bank to the local restaurant, are struggling to find staff to fill shifts because of the isolation rules. A lack of staff will push up wages. Logistics and supply chains are another big problem. You can see that in supermarkets across the country. COVID is still preventing people from eating out and travelling. The economy, Michael, is heading into 2022 with plenty of unknowns hanging over it.
All right, this might be a little bit of an understatement, but all this debate, all this uncertainty seems to be really affecting markets.
Sure is. The local market, the S&P ASX 200, is off 8% so far this year, including 2.5% back on Tuesday. It's now trading below 7,000 points. It was back at that level in May last year. The banks have fallen back, with market leader Commonwealth Bank now at $95 a share. Remember, late last year it was about $110. That's a big fall. CSL is off 11% in less than 4 weeks. Wesfarmers is down 13% in the same time period. Plenty of movement in stock prices.
Yeah, and Wall Street has been no less volatile as well.
In fact, it's been even more volatile. Traders expect the Federal Reserve to indicate when it will start lifting interest rates in the next 24 hours or so. Many think that might occur as soon as March on the back of inflation being at multi-year highs and showing few signs of falling back quickly. Now, alongside geopolitical tensions around the Ukraine and Russia and ongoing COVID worries, traders are pretty nervous at the moment, Michael. Wall Street so far in January has fallen 8%. A big reason is because investors are going cold on tech stocks on the basis that consumers will pull back their spending on technology post-pandemic. And tech stocks, think Apple, Microsoft, Amazon, Tesla, Meta, Netflix, Nvidia, make up a very big chunk of the index. Having said all that, Wall Street, and particularly the tech stocks, surged last night, with the Nasdaq 100 up around 3% in early afternoon trading. Michael, the globe's leading market is very, very skittish at the moment. European markets have been somewhat calmer, in part because the euro indices don't have the preponderance of tech stocks that Wall Street does. The German, French, Italian and UK markets have all outperformed American markets so far this year. So too Asian markets, though Japan has had its moments through January. Overnight, European markets were up around 2%.
And what about commodities?
Well, oil prices are stubbornly elevated, around 7-year highs. Much of that reflects the tension around Russia and the Ukraine and what the US and NATO will do. Gold has benefited in recent weeks as a safe haven for traders. Coal and gas prices have run pretty hard as well, and while they're not trading at the levels of October last year, they are up substantially this month. And the Aussie dollar is trading around 71.5 US cents. Surprisingly, that's a little lower than you'd expect, given all the speculation about interest rates in Australia and the higher commodity prices.
All right, big start for our first official episode of 2022. We'll be back in a moment with the rest of the day's business news. Sean, Dylan Alcott, the Paralympian and tennis champion, has been named Australian of the Year for 2022, but there were plenty of business leaders recognised yesterday in the Australia Day honours list as well.
There were, led by former Australian Competition and Consumer Commission Chief Rod Sims and mining magnate Gina Rinehart. So too, former Chief Scientist Alan Finkel. They're all on the list. Whether or not you believe in Australia Day, the honours list is something that highlights outstanding achievements by Australians, and I think they're really worthwhile. Others to make the list this year included investment banker John Wiley, Transurban and Sonic Healthcare Director Jane Wilson, the former boss of Coca-Cola Amatil, Alison Watkins, and the head of the Bureau of Statistics, David Gruen. Another to make the list is former boss of News Corp in Australia, John Hardigan.
Now, Sean, turning to COVID news, there are still plenty of cases each day, but there seems to be a sense of optimism now about the numbers.
I think you're right, Michael. Of course, return to school will trigger a spike, but at least in New South Wales and Victoria, it appears that peak Omicron has passed. Victoria's COVID-19 commander, Jeroen Weimar, yesterday said he expected around 13,000 new infections a day in coming weeks, down from a high of 50,000 in early January. He said people had changed their behaviour around Christmas and New Year, and that had helped pull back infection rates. I know our household certainly changed our behaviour, and I think that happened across the country. New South Wales reported 21,000 new cases yesterday, but authorities said the number of people in hospital had fallen by almost 150 to just under 2,800. There were 13,600 cases in Queensland yesterday, and Chief Health Officer John Gerard said he expected cases to peak in coming days. Now, Michael, it's the first time in nearly 2 years that Queensland has reported more cases in a 24-hour period than Victoria. There were 2,400 cases in South Australia, 900 in the ACT, 700 in Tasmania, 500 in the Northern Territory, and 24 in Western Australia. Its Premier Mark McGowan defended his stance keeping the state closed, saying it was saving lives.
Now, Sean, towards the end of last year, we talked a lot about retail and the fact that people were ready to spend money as lockdowns lifted. There's been mixed news, though, for retailers in recent weeks. It did seem like things were picking up, but the Omicron outbreak has really dented recovery plans.
Yeah, very true, Michael. This week, department store Myer said sales were up 12% in the 6 months to the end of January compared to a year earlier. Good news. Online sales were up 50%, but, and it's a big but, Omicron had a really negative impact on trading over the past 4 weeks or so. Same deal at the Accent Group. That runs Hype, Platypus, Skechers, Glue and Athlete's Foot. CEO Daniel Agostinelli said customer traffic was soft in January and the last week of December. Sales were below expectations. That group has also grappled with supply chain disruptions. Another homeware retailer, Adairs, this week warned that its first half profit would be hurt by supply cost increases and higher delivery costs to online customers. That sent its share price tumbling 21% in one session earlier in the week. Fortunately for retailers, they had a good end of 2021. But anecdotally, the summer sales period hasn't been up to expectation. Certainly not great for shareholders. My share price is down 14% this year so far, notwithstanding a 7% rise on Tuesday. Accent is off 17% since December 21, and Adairs is off 26%.
Wow, big changes. Now, Sean, of course, the big event this year is an election due sometime before the middle of May. So presumably we are going to see a heck of a lot of campaigning between now and then.
Something to look forward to, would you agree?
Oh, look, I would, but I'm into that kind of thing.
Fair enough. Look, the federal opposition has already hit the ground running, Michael. In recent days, opposition leader Anthony Albanese has been pushing funding to help schools and students adapt to living with COVID-19. He's been complaining about the government's not-so-rapid rollout of antigen tests, and he's committed that a Labor government would continue the big spending beyond the pandemic. Mr Albanese has also said Labor would seek to strengthen Australia's alliance with China and engage in multilateral forums like the United Nations.
Now, I know I've just admitted my bias towards this, but we are going to get plenty out of this, aren't we?
Sure are. And I mean, if you don't like politics, the next few months is going to be a bit tough. Now, we know the opposition is ahead in many polls, and Anthony Albanese is a much more electable leader than his predecessor, Bill Shorten. But don't underestimate the power of incumbency, especially in a crisis. And don't underestimate Scott Morrison's standing with the electorate.
Okay, Sean, what's making headlines in today's news media?
Plenty of media this morning is reporting that social media giants TikTok, Facebook and Twitter will be called on to quickly move incorrect and misleading content about the federal election as part of enhanced integrity measures designed to combat online disinformation. The Financial Review is reporting data on the world's most popular brands. Apple comes in at number one, no surprises, followed by Amazon, Google, Microsoft and Walmart. In Australia, Bunnings leads the pack, followed by Woolworths and Officeworks. And finally, Associated Press is reporting that there were 21 million new coronavirus cases reported globally last week. That's the highest weekly number of COVID-19 cases recorded since the beginning of the pandemic. The number of deaths, however, was largely unchanged at 50,000.
Running through a few of the other stories around today, buy now, pay later groups Zip and Sezzle have confirmed they're in preliminary merger talks. There's been plenty of speculation about it in recent months. It won't be a surprise to see a bit of consolidation in the buy now, pay later sector this year as competition and regulation heat up.
Fortescue Metals says it's on track to beat its iron ore export target, but the group is only receiving about 68% of the benchmark price because of the relatively low iron content in its shipments. So while quantity is up, quality is down. This has always been an issue for Fortescue. Its share price tumbled more than 5% on the news on Tuesday.
How about this one, Sean? Amid the carnage in markets on Tuesday, there was one standout performer, A2 Milk, and it sounds a little bit strange to be saying that, doesn't it?
Because it does. We have been talking about A2 Milk underperforming. I think it was the second or third worst performer on the market last year.
Yeah, pretty extraordinary, which makes this result even more impressive because the rest of the share market was tumbling. A2 Milk shares jumped almost 7% on Tuesday. Pretty amazing. The reason was a media report that Canadian dairy giant Saputo is set to announce a sizable acquisition target in Australia.
I hope that's the case for A2 Milk because if it's not, its share price is going back the other way. Finally, Westpac wants to boost its green credentials by rolling out environmental, social and governance training for more than 800 bankers. The goal is to assist customers reduce their carbon emissions. CEO Peter King said it was important to help small and medium-sized businesses shift towards lower emissions. I reckon we're going to get a lot of those sorts of stories this year as well, Michael.
Yeah, I reckon we might. Now, what's the key overseas news this morning, Sean? It seems the focus is really on Ukraine at the moment.
It sure is, and Russia's ambassador to Australia, Alexei Pavlovsky, says Russia is not planning to invade the Ukraine, notwithstanding more than 100,000 troops have amassed along the border between the two countries. He said there was no intention at all to go to war with the Ukraine, and the troops were not a threat. No one's really believing Russia when they say this, and really the situation is changing hour by hour. Also, Omicron continues to wreak havoc across Europe, with France recording its first day of 500,000 infections. The good news is that the number of patients in intensive care in France isn't rising. Even though case numbers are up, parts of Europe are reopening, with the Netherlands allowing bars and restaurants to start trading again. And Michael, in Israel, a government panel has recommended a fourth dose of the coronavirus vaccines to citizens. Finally, Bob Dylan has sold his entire catalogue of recorded music to Sony Group. That's about 60 years' worth of work. While the amount paid wasn't publicly disclosed, it's been estimated at around $200 million US. Now remember, in late 2020, Mr. Dylan sold his songwriting catalogue to Universal Music Group. It's a trend. Remember last month, Bruce Springsteen sold his back catalogue in a deal worth around $500 million. All those old rockers, they're starting to make some money out of it.
I reckon that's a topic that could well be up for discussion in this Sunday's Sunday edition. What do you think?
Guaranteed.
Absolutely. Now up next is the Fear and Greed Daily interview with Rich Newsom, Head of Wealth at Mercer International.
Yes, Michael, it couldn't have been better timed given what's going on in global markets. Rich is based in New York and very close to the action. It's a great interview for all investors.
Yeah, and with about $400 billion US in global assets under management, certainly knows what he's talking about. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael. Have a great day.
Thank you. It's Thursday, the 27th of January, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.